Hi, everybody. I'm John Wickham, real estate numbers geek, and I'm a real estate with HomeSmart. If you're looking for a numbers agent, call me. I can put you in touch with one. I know a lot of the agents that are ex-engineers, et cetera, in the valley. So if you're a numbers person, that's probably the kind of agent you want. Anyway, here's the Phoenix real estate market is up 17% in 1 year. That sounds crazy. Here's the graph I just updated. You can see comparing. It was the median home price for single-family homes that were non-distressed was 299 last September, and now it's 350. Wow. Let's scroll down a little bit more. Here's a report. Oh, by the way, I can scroll down further and talk about that. It looks like we had a wave of people who had put off selling in the spring, but it looks like we're through that wave now. Anyway, back to the 17%. Here's a quote from Mike Orr, who I totally respect. Annual appreciation is likely to rise sharply over the next 6 months, reaching well over 20%. When I first saw this, I thought 20%, that's crazy on an annual basis. But it was 17% here. So it's just kind of continuing the current trend. Yikes. Okay, so why is that? Part of it is because the interest rates are so low, and that effect is what's really moving the market to a large degree. There could be other things, like is it people who were considering maybe buying, and then when COVID hit, it's like, hey, okay, we got to move forward on stuff. Like it pushed people who were considering buying to move up their plans or something. I'll leave a comment. I want to find out what's going on here, and I want to hear your input on that. Okay, so another reason is here's for the interest rates. For you can see this graph that I made on my other website, realestateDakota.com. That blue line is the interest rate for a 30-year mortgage. It's 2.9. This line here is the first week of January 1990. It was almost 10%. Now it's 2.9. So what does that do for your payment? Your principal and interest payment per dollar is only 48% of what it was back then. And you can see the trend that as the interest rates go down, what that does for your monthly payment. Here's a little peak we had at the end, well, almost 2 years ago. And prices have been headed down, or interest rates have been headed down ever since, which makes homes easier to buy on a monthly, when you look at it from a monthly mortgage payment. Okay, here's another way to look at it. I took that concept and applied it to Phoenix, and here shows you what Phoenix prices are, the real monthly mortgage payment price. And you can see prices now, are cheaper than they were for most of the 90s and most of the 2000s. So that means to me that that Mike's saying that prices go up at a 20% rate for the next 6 months isn't crazy because there is room for prices to go up. Personally, I have a personal bias against prices going up because I think that when prices for homes go up, it takes money out of the economy that could be going towards things that produce jobs instead of paying for stuff that was built, 20 or 40 years ago, homes, that when prices go up, it's a net drag on the economy. But hey, what are you going to do? There is room for prices to go up. Great. Leave your comments. I'd love to hear them. And if you're ever looking for a real estate agent who's a geeky as hell, give me a call. I can put you together with somebody in the Phoenix market. I'd love to. Take care.